What is going on, everybody? What's going on? How's everybody doing today on this fine Sunday afternoon, Sunday evening? Well, it's James Hollingsworth, and I'm back on the Working People's Podcast, where everybody desires to build generational wealth and a financial legacy for their families. And I have with me today special guest, man. I'm super honored. My brother, my friend, Don Ed. Life is in the house. Why don't you just go ahead and introduce yourself, though?
What's going on? What's going on, everybody? My name is Donovan, Don Ed Life, and I'm excited to come talk to you guys. I am a realtor slash landlord, and I'm happy to be here. Excited to come speak with the people.
Today is a special conversation because I personally know people that are currently renters, and I know their heart is to own a home and step into that space and get out of the whole rental lifestyle. And so today we're going to talk about home ownership, and I got a few questions from my brother so he can share his knowledge and his experience and really hopefully not just inspire some of you, but give you maybe some starter steps and some basic beginning things that you need to do to move into that space. Because one of the problems I think, Don, and I don't know if you run into this, but let me know, do you run into people that feel like they just can't own a home? Maybe they don't feel like their credit's good enough, or they don't have the money. Do you run into that a lot? And if so, what would you answer and say to that?
Absolutely, yeah, all the time. A lot of people, especially the younger generation, think that home ownership is unreachable, impossible. Like, how am I supposed to have my own house? And when I think about the word home ownership, I really like to hone in on the ownership piece.
Wow.
All right.
Yeah, bro.
like it is yours. You own that. And as we continue to talk, I will dig a little deeper on what that ownership really means to people. But it really comes down to education, and in a sense, we are a product of our own environment. And if we're not around people that have homes that talk about that type of asset and how you are invested, when you do buy a home, it becomes very difficult, unreachable.
Facts. I noticed one thing that you posted about 6 days ago on your Don Ed Life Facebook page. And by the way, everybody, we're going to make sure that you have his information where you can contact him if you're looking to make a purchase or any type of thing like that in the Central Florida area. For all of you snowbirds, you people in Michigan that's trying to get up out of here when the snow starts falling, or in Milwaukee, Wisconsin, I got a lot of friends and family and people there. Or if you're in New York or wherever you are, this guy right here can help you out in the great state, of Florida, in the Central Florida area. But we'll get to that in a minute. So, Don, about 6 days ago, you posted a little one-liner. It said that the median home price is up about 14.8% since this time last year. I think that has become a deterrent for some people. So say, I think I should wait, or now's not a good time because home prices are going up. There's going to be a correction in the homeowners market, and interest rates are going up. Do you think people should not buy a house right now?
I would say I would still encourage people to buy. What I would say that please make sure that you do your research and get a realtor that's willing to put in that work and find a property that's just right for you. I'm not in the business of pushing my customers to buying anything that's not right for them, or a price that's going to beat them over the head, something that they can't afford. My goal is not for anyone. I would wish I wouldn't wish on anyone to be house poor. I hate that phrase, being house poor.
Man, I hate that too. Yes. Oh my God. Oh, I hate that. How
For
do you
sure. So
say people should avoid that though? What percentage? I know the percentage that when people go to the mortgage companies, man, they tell them, "Oh, you can afford this," and half the time that that amount that they be giving them, I be like, is that really within their scope of reach? What I mean? I know you said they can afford it, but what would you recommend people stay within in terms of a percentage of their income for the home purchase?
sure. So we can touch on that. So we have something called a debt to income ratio. I would always encourage folks to write down what are all your liabilities? What are you paying on a monthly basis? And then right next to that, put all of your income that's coming in, right? And see what that percentage is. Now, there's so many different types of loans. The I would say the loan that folks gravitate to that don't have as much assets saved up is going to be an FHA loan. All right.
Yes,
So with an FHA loan, they allow more debt. So 43% is the ratio for debt
that's
to
good.
income. And so those folks tend to not have as much saved up. So because of that, it's 3.5% down versus a conventional loan is a little more down. It's 5% down at minimum, but it's not as flexible with the debt to income ratio. It's dropped down to 36%.
Wow.
So you
Okay,
gotta have, you gotta have to make sure that your debts aren't too high compared to what you're bringing in.
that's good.
Um, the good news is, there's a lot of, loan originators out there that are going to do the right thing. And even if you are close, they're going to make sure that they're giving you the right loan amount. All right. They don't, even if I can be approved for 500,000, don't give me 500,000 if I'm gonna be eating ramen noodles,
Jesus, thank you, Lord.
Approve me for the 400 or the 450. So I'm still living within my means. But also comes, making sure you're choosing the right people that are not just trying to get a sale out of you.
Oh my God, come on, bro. So you mentioned one about the FHA loan. Can you give us a little bit more details about that in terms of you recommend that for people that might you say have a little bit higher debt to income ratio, and
Yep.
also you mentioned about the less down payment. Is there anything else you could tell us about that type of loan? Because it seems like it's more geared toward either new first time home buyers or something like that. What would you say?
For sure. So an FHA loan is geared to more folks that don't have as much to put down. But what I would say is, um, do your best to save a little more, and
Mm,
here's why. So right now we are in a very competitive market, and an FHA loan is like a government backed loan, whereas conventional, we have more private lenders. So when you have a government loan, the process is more extensive during the underwriting of the loan. So whenever you're trying to buy a house, the
oh,
banks are going to look
oh,
into
oh, oh.
everything about your life. They want the bank statements, they want the tax documents. Man, they might even want birth certificates. You know what I'm saying?
Hey, hey, Obama said he was born here. What y'all keep asking him for his birth certificate for?
That's what I'm saying. So because it's more, I guess they ask for more documentation. When you're trying to buy a house, it's it's still a seller's market. So say, you are selling a home, right? The ball is in your court because you're the hot commodity. You're the hottest seller on the market right now. All right, you have all these buyers that are coming through your doors, and they're gonna say, "I love it, I want it." All right, but guess what? You're the sixth person to walk in that home today. All right.
Today.
And there's a great chance at least half of those other people are going to love it too. So what's going to happen is, the realtor, so the buyer's realtor is going to communicate with the realtor that's selling the home and say, hey, ask this, that, and a third about the house. Make sure everything's tip top shape. Review the seller's disclosure. We're looking at major systems. such as, plumbing, roofing, HVAC, just to make sure, we'd want to put in an offer,
Right.
which I'm sure you still want to put in the offer. But, and we say, all right, when's the deadline? The deadline is in 2 days. We need your offer within 2 days, or we need it today because the seller's making a decision today. So now the seller has a table of offers, hypothetically,
Hypothetically, right.
yeah. We have 5 conventional loans, which is a private back, which requires less documentation, easier to get approved, versus an FHA loan, government, harder to get approved, and in a sense, that customer doesn't have as much money. All right,
Yeah.
because they're putting down. So I'm, in a sense, thinking, why not go with the offer that's more secure in a conventional
Yes.
loan? All right. So, in a nutshell, yes, FHA is an option, but right now in these times, it's very, very, very hard for a seller to pick your offer.
But that makes a lot of sense. That makes a lot of sense. Now, also one more thing. I know it's something, especially if you're a new first new home. Good Lord, my tongue all tied up. First time home buyer, you may not be aware of some of the other costs associated on the back end or as you get into the deal. So can we kind of talk about like the appraisal and maybe even like an inspection, those type of things that a person may not realize they need a little extra money for, those types of things. Can you talk about some of those I don't want to say hidden because they're not hidden, but maybe they just not aware of those type of costs, and so they're now like, oh God, I just thought all I needed was the 3.5% now.
Oh, for sure. I would be happy to. So I'll kind of walk you through it. So we had a table full of offers. I want to pick that one because it's extra sexy and they're putting a whole bunch of money down, right? So pick that offer. In that offer is basically the real estate contract. And in that contract are the terms. So it's going to say what they're willing to offer for the property, how much they're putting down, as well as earnest money, or
Earnest money.
or some folks call it, the deposit. However you want to put it, it's good faith that you are committed. So I'm putting my 100 on the table because I'm committed. I'm trying to do this. You know what I'm
Yes,
saying?
trying to do this.
So so there's a range. So the smallest earnest I've ever seen is $500.
Okay,
What I see more consistently is at least $1,000. Now,
absolutely.
now, remember the terms of your contract. You want to be as appealing as possible to the seller. So you may even have folks that put $5,000, $10,000 down,
Yep,
and
that's
also,
earnest money.
yes, earnest money,
Yes,
good faith. I want this to go through. Now, this isn't like money that pushed to the side. This will go towards the purchase of the home.
yes,
All right. Now, I wouldn't recommend putting way too much money down as a deposit because if something happens on the buyer's end where they do not get approved for the loan, technically that seller may say, my home was off of the market for a certain
yep,
time,
yep,
so I'm going to keep that deposit. All right.
yep.
So,
That's
so that's
facts.
your that's facts. That's facts. So don't get crazy. I know you want the house, but chill a little bit.
Don't get.
All right. So the next thing that we want to do is we've we've accepted the deal. We have 3 business days. By the end of the third day, that deposit should have been already wired over to the title company, not the seller, the title company. The title company is the middle person that handles the money, as well as pull all the records for the home, to make sure that there aren't any liens on the property. And maybe you
Yes.
bought some solar panels 5 years ago. They're not paid for. You don't have people come for you,
Oh
or
yeah.
maybe some back taxes that aren't paid, or
Yep.
some
Water
back
bill.
water bill. They're gonna run all those records for you, and they're gonna make sure that your brothers, cousins, sisters, auntie, whatever, can't come in and claim the title to that deed in the future.
Right.
So that's
Right.
why the title company is good. So great. So we got the earnest money, and now also within the contract there is what you call an inspection period. Now, the inspection period is it can be arranged, just depends on the terms of the contract. But right now, I would say in today's world, the inspection period should be no more than 5 days. So
Yeah.
from the time the contract is signed, so say you have 5 days to get your inspection on the home. So
Absolutely.
you hire someone, a professional, licensed that knows what he's doing,
Please.
and
Please. Don't get your Uncle June bug.
that's right, that's right. Because if you have a loan, you're not buying this property cash.
Right.
You're going to have a lender that's going to want proof of this inspection, and it has to be someone legitimate. And your inspection right now, I would say, will range anywhere between $350 and $500.
Okay. Yep.
All right. So we have that, and something that's also good to know is that during this inspection period, the buyer has an opportunity to exit the contract by any means.
Mm-hmm.
All right.
Absolutely.
And remember, sexy contracts are key. So there's some people that, especially cash buyers, because there is no lender, they don't have to get money from anybody else. They don't have to send an inspection anywhere. They're
That's
going
right. Yeah.
to waive the inspections. All right. So there's no period to back out, and there's nothing for me to say, hey, the roof is not in great shape, the HVAC isn't working. So they don't want a sexy contract. They're going to say, we don't care about that. You know what I'm
Right.
saying?
Yeah. Yeah. Yeah.
All right. So one of the other costs is going to be a survey, which I'd say it's going to be between $500 and $700, based on the size of the property. Now, if you got acreage like you,
I know. Good Lord, they hit me. Boy, they hit me, boy, with that survey. I was like, whoa, good Jesus Lord.
that's right. That's right. So basically, the survey is, I guess, just redetermining the property lines. All right, which part of this is mine? Because it's more than just the house.
Right.
When you're in like a development like this, you may have a few feet. You know what I mean? But those few feet matters.
Bruh.
And
Tell me about it. I mean, I've just seen so many people get into arguments with their neighbors over a little strip of land and where they put a wall or where they put a little burn pit or where they didn't mow or that tree, that doggone tree. Whose property is that tree on and who's responsible for cutting that joker down?
exactly, exactly.
So
So
survey
the
is very
bank,
important.
yeah, very important. The bank wants to know how much of it is included here, and in a sense, they're protecting their investment because this is their money. All right, you're borrowing
Right.
their money, as the lender. And then the other piece is going to be an appraisal. So the appraisal, I would say, it's generally similar to the survey, anywhere between $500 and $800. Now,
Yeah.
keep in mind, it depends how big this house is. All right. And in the
Yeah.
area. All right. So the numbers I'm saying is based on the area. So right, that's what we have right now for Florida. Now the appraisal is really someone coming out to the property and making sure for the contract selling price is worth it. All right. So
Mm-hmm.
if you buy it for 600, the appraisal better come back for 600 or higher, because
Amen.
they're not going to give you a penny higher. Um. So
I'm
and
shaking my
then
head, y'all. Miss Silly, you ain't getting no more. Miss Silly, that's
yeah,
it. 600. That's all you getting.
yeah, and guess what? Say it comes $10,000 short with them reviewing, recent home sales in the area, like, oh, this ain't worth it.
Right.
So say it's 10,000 short, it's now the buyer's situation to come up with the difference, or the realtors, can come together and say, hey, can we go back to the negotiating table here? Can we drop this price? Let's make this deal work. All right.
Absolutely.
We don't want the property to go back on the market. Let's go ahead and
Absolutely.
get this deal to work. So also you got to make sure you have a good realtor that's willing to put in that legwork for you. And then the last piece, I'd say the biggest piece is going to be your closing costs.
Oh my God. Oh my God. Oh Lord. Closing cost.
Closing costs, right? So let me bring up
You
my
might,
calculator.
if you don't prepare yourself, some of y'all might have to sell your pets and your and your sneaker collection to come up with that closing cost. So make sure y'all. No, I'm just playing. Not the Snickers.
Not the sneaker collection. All right. So just to recap, in the beginning, I talked about your down payment. So anywhere between 3.5% FHA, 5% conventional, and remember, those are the minimums.
Minimums.
And there are going to be fees like mortgage insurance fees that's included in your monthly payment because you're putting down less than 20%.
Absolutely.
All right. So say we were going with conventional 5%. Now we have to consider the closing cost. So this is the cost for you to borrow the loan up front.
Yes.
All right. So right now, what I've seen is about 4%. All right. So just to put in perspective, we have a house that's 500 grand, right? If you have 5% of that, we already have 25,000.
Right.
All right.
Yes.
For that down payment, and now we're going to add another 4% for closing costs. That's another 20 grand.
Yes.
So that's 45 grand.
Oh
plus,
yeah.
Plus, the other costs I mentioned. You'd still be under 50 grand. But remember, I'm doing a higher purchase price for home right now.
Right.
You don't have to drop 500 grand for a house.
Facts.
There's some steals out there. And there's some other fees depending on what type of loan that you're getting. For an example, VA, my veterans out there, that's also a government loan. So you would be required to do additional inspections. So we already have your home inspection. They're also going to want like a termite inspection, like a pest, to make sure there's no pests in the home or like wood destroying organisms.
Okay. Yep.
And if the house has a well, you're going to have someone come out and do a test on the well as well. For an example of some additional for veterans.
That makes sense. Something else I just thought of too, Don, is like the money that you're going to need for your homeowner's insurance. A lot of times you got to get that secured up front as well. So simultaneously while you're coming up with these other costs, right in that same window of time, you're probably going to have to put down, secure a homeowner's policy, or especially if you're getting out of being a renter into a home. So that cost is something that you need to be thinking about as well.
Absolutely. The home insurance, and that's a whole another situation.
Yes.
But it is hard. There's a roof situation going on right now, and the home insurance companies want everybody to get a new roof because there is a lot of fraud right now. There's a lot of fraud. Excuse me. So a lot of people are filing claims, and the insurance companies are semi, fed up with it, and it's like, yeah, hey, we need people with new roofs. So when these renewals are coming around, we're telling folks to get new roofs, or we have insurance companies hiking those rates up.
Yes.
All right?
Yes.
So please make sure that you shop around. There is no shame. You don't have to go with the first or second one. Shop around. scour the internet, talk to your friends and family. Who do you have for your homeless insurance? Are they good? Like what's going on?
That makes
So
sense, bro.
and a homeowner's insurance varies like greatly. It is an annual premium. So are you going to be paying $800 for a smaller home for the year, or are you going to be paying 4 grand?
Come on now. Talk to us.
The
Absolutely.
good news is it's the only time you're going to have to pay for it up front, because afterwards, more so than not, it's going to be part of your
Your
escrow. All
escrow.
right.
Yep.
So it's going to be included in your monthly payment, your one a monthly payment that you're paying for your principal and interest and homeowners
Taxes
insurance type
and
taxes.
taxes. Yep. Yep.
That's right.
So with new home buyers, because we've talked about some costs, and I can already feel in my spirit some people saying, "Oh my God, they adding up the money." Try like, "Oh, I just can't afford it." Look, there are first time home buyer programs, and I don't know, Don, if that's something that you feel that is. Maybe we should kind of tell people about that, because a lot of people don't realize they can ask the seller to pay part of the closing costs, but first time home buyer programs. A lot of times people don't realize that there are other programs. I got into a rural development loan for my house, which was a different loan than a conventional or FHA, and I didn't have a down payment. Now I did have closing costs, but I didn't have a down payment. Kind of give some insight or maybe some guidance to people if they're looking at making their first purchase for their family, to kind of give them some encouragement after we've talked about these numbers, to maybe stir them in a way that they can get some other type of assistance. Family. A lot of people don't know they can ask family for help with down payment. That stuff just has to be disclosed. But maybe I'll let you go into some of those things if you can.
Yeah, absolutely. So seller concessions, as you mentioned, is one of those things the buyer can include that in the offer of buying the home to contribute to their closing costs, whether it be maybe a 3, 4, or 5% towards the closing costs to help close the deal. Now remember, it may not be as sexy if they have another offer on the table that does not have that, but if you have a house that's been sitting in the market for quite a bit, then that'd be a perfect opportunity to do that. There is down payment assistance programs right now, definitely in Florida.
Wow.
Of course,
Yes.
it's going to vary based on where you are, but we've gone in stints where there's nothing at all or an influx. Right now, I've seen an influx of programs available, and it's quite simple. You basically you'd want to get with a realtor that knows about them, of course.
Yes.
Or just do your research. You scour the internet. Some of it is county based. Some of them is state based. And you'd want to find one that is offered through that works with your lender. Because say that you work with Bank of America for your loan, excuse me, but they won't work with this down payment program from down the street. You know what I mean?
Right.
So you have to make sure. So you have to make sure that those coincide. I mean, it's pretty cool because right now I've seen programs where it's between 3 to 5% of the purchase price. So
Yeah.
that basically covers your.
That covers a lot. Yes. That covers your closing costs.
I've seen some that are just a flat number, like say $10,000, and you really don't have to do much to be eligible. A lot of the times there's income limits. You can't make $1 million. They're not going to.
What? No, you can't. Yeah.
And the next thing is you basically take like a home buyer's course.
Of course, yeah.
Yeah, so say
Are those classes still running about a week long? I know back years ago they used to be about a week long. Have they shortened them now? I hope they have.
Yeah, you can get it done in a day.
Thank you, Lord. Because, man, I remember back in the day, boy, I went to one of them jokers. That thing was a week long. I felt like I was in college. Yeah, so you can
Oh
get
yeah.
them done in about a day.
Yeah, a day or depending on where you are, but they're pretty cool. Now, keep in mind that if you're going through a down payment assistance program, that does extend your closing timeline a little bit. So your standard closing time frame right now is 30 days. If you are doing a loan assistance program, add at least 15 days to that because you're working with that county or the
Yes.
state to get those funds. So you have to take that into consideration in the sexiness of the offer and how bad you want that next house. But the programs are available out there. You just need to search and look, and we really just need to get the education because a lot of people out here just uh,
They totally unaware. That's why I wanted to do this podcast show with you, is to really bring people. It just amazes me how so many people are just not knowledgeable and unaware.
yeah. Certain things like it's really just not taught, like like credit. Oh my,
Oh,
that's a
good Lord.
whole.
Well, we're going to have you come back. If you don't
Oh
mind,
my
we're going to
God,
have you come back for that one because that's another conversation. Good Lord.
yeah, it's crazy. One thing I really do want to touch on with home ownership, which is key, it's the power of saving. All right, so I want to touch on this because we live in a world, and I am no exception. All right. I have spent a lot of money in my past to basically look good for other people. You know what I mean?
Whew, Lord Jesus. Yeah, I know a little bit of something about that.
You know what I mean?
Yeah.
Now, don't get me wrong. So I've scaled back. I'm still buying. Like, don't get me wrong. But when I make a purchase, I try to do my best to make educated purchases to make sure this is something that I want. All right. I'm not out there trying to sell myself and have like I don't even know what brand this shirt is right now, but you already know but you already know my sneaker room up there is something serious.
Yeah. Yeah, buddy.
So I mean, like we live in a world where we're buying nonstop. We got to get the new iPhone. We got to get the off white. This, that, and the Gucci. The Prada.
Oh, stop
But
it. Ouch.
what does that really do to our net worth? So I've been toying with the thought about net worth and think, what is net worth really? How do you really classify someone's net worth? And it really comes down to your assets and your
Absolutely.
liabilities. All right.
Absolutely.
So you have for your liabilities, you have all your loans that you have, whether it may be a car, say you have a house. That in a sense is a liability because there's a loan. If there's a loan, if there's no
Absolutely.
loan, then you're all good. And of course your credit cards. All right, the credit cards.
Ooh, yep.
That's a whole nother situation. You know what I mean?
Yes,
And then
sir.
we move over to the assets. So you have your cash, you have maybe vehicles that are paid off, or properties that you have paid off. But also something that you can include in there is your appreciated value of your real property. All right.
Absolutely. Absolutely.
So so think about it. So as we know, home prices continue to go up, right? So
That's why that 14.8% number is so important, and I'm glad you're speaking on. But go ahead, finish what you're saying. This is good stuff here.
so say you bought a house for 400,000 a couple years ago. That house is worth probably at least six now. So that 200,000, that's appreciated value, right? And that's money that you can technically, in the event of a catastrophe or an emergency, in a sense, pull that money out by refinancing with a cash out option with your bank?
Cash out option. There you go.
Or do you want to refinance cash out and use those funds to buy another property?
Yep. I even said at one point I was going to bring up the conversation about Helocs and telling people about that tool that's available to you if you own a home.
Absolutely. So we're including all these things in your net worth with those appreciated value. Now, if you don't own a home, all right, you're renting, and no shade to renters. You know, it's, and I could go into the renting situation heavy too, but it's like, how do you put yourself in a position of safety? All right, in the event of I have this, so my back isn't next to the wall type of situation. Yep. And when we are buying every single new Jordan, every single new iPhone, it makes it difficult for us to save.
Absolutely.
All right. Yeah, we can show everything on social media, but can you show your bank account?
Thank you. Hello, come on now. Bruh, you killing it right now. And this is a part of why, I've been talking about these things on the Working People's Podcast and been talking about the disparity between African Americans and other ethnic groups in terms of our wealth. We have $1.6 trillion of buying power as an ethnic group of people. We're number 3 in America, but yet we only have about 2% of the millionaire population, according to credible sources. So, and then our numbers for home ownership, which is another reason for having you on, have actually decreased. And the wealth disparity between people that own a home and rent, I've shown the numbers on this channel. I think the difference is like, when it says like 100, I'm going off memory, it's like 148,000 is the average net worth of homeowners, and of renters is like $5,200. This huge gap in wealth and net worth between renting and owning a home.
Yeah, absolutely. So I keep going back to what you said when you said as a renter. All right, if you need to rent, by all means, go ahead and rent.
Absolutely.
But when you do have the opportunity to own a home, it's a different ball game. There is small to no overhead, right? When you're a renter, you have a landlord. All right, that landlord can say X, Y, and Z. You can't put this hole in this wall. You can't decorate the way that you want to. Don't be gardening in my space.
Yep.
Don't be riding your 4-wheeler down my street.
Yep.
Versus with a homeownership, it's yours to do. Now, keep in mind with home ownership, you're still going to have potentially a homeowners association. They may not want you to put up a certain type of fence. They don't want you to run a mechanic business in your front yard.
Right.
Things like that. But you get to do what you want, and obviously that differs depending on where you're at. You in a suburb type of environment, or you out here like my guy with all this land. He doing what he wants.
Man, I do what I want. I had me some chickens out here for a while before the weasel came and killed them all. I was really upset about that. I get to see all kind of wildlife coming out through here. Hey, and another thing, I own my own property, and I live in an area where I can go out and target practice, shoot my guns, target practice. All my neighbors do it. Nobody says a thing on my own property.
That's awesome.
Flexibility.
I'm trying to find one. I've been looking. I got to make sure it's right.
I know that's right. One other thing too, before we wrap things up for today, for this episode, I'm definitely hoping that you can come back and we can talk some more about that credit. Oh my God, Jesus. Anywho, oh Lord. So I wrote down a note for myself. there is a general ideal that people say that you should probably fully fund your emergency fund. That you should also, I've heard some people now going around telling people they need to have that 20% down to avoid the PMI insurance. For some people, that means delaying buying a house probably a substantial or significant amount of time. What's your thoughts on those two ideals of going ahead and trying to get the 20% down to avoid the PMI and also fully funding a 6-month emergency fund before you buy a house? I mean, would you say wait to do that, or what's your advice about that overall?
Honestly, I love real estate so much. I'm not waiting. I'm not waiting. I'm not going to.
Me either. I'm not waiting either.
I'm not going to miss out on that opportunity.
No.
But what I will say, so 20% is hard to come by, but the good news is you can refinance. So of course, when you have a lender, you get your rate and whatnot.
Yep.
And a lot of the times it's a 30-year loan. That is the standard. So say you are in that house for a year and you have more money saved up because you're not paying that landlord that increase in rent.
Yes, sir, because it's coming. It's coming.
Oh, it's been happening, my guy.
I know in Florida, because I got some folk that I know down there, and they struggling right now. That rent, that's one of the places where rents have increased by what? Is it like 20-something% increase down there?
Sometimes up to 40.
Yeah.
40, 50, and don't let me start talking about South Florida. South Florida, we have houses that should be maybe 200,000 that are going for 8.
Oh my God.
So well. I mean, but that's a different lifestyle. That's more of an entertainment type of lifestyle. You know how places like Miami get down. There is a lot more affordable areas because location is key. But I'd say don't wait if you have the money to cover all the closing costs, the down payment, and those other items. If you can save up at least 2 to 3 months rent just to have something in an emergency, I say we're good with that. And after a year or two, if you want to refinance your loan, you can do that. So generally, folks start off at 30, but if you're in a much better position, a year or two down the line, maybe switch to a 20-year loan, maybe switch to a 15-year loan if you can afford it, because a lot of the times it will lower your interest rate.
Yes.
If you are going to do a shorter length of the loan. So that would be my recommendation with that.
Man, this has been a lot of value in this conversation. So what I want y'all to do over there on YouTube, you know what to do. Press that thumbs up like button, drop some comments below, and subscribe to this channel, The Working People's Podcast, and ring that bell, man, so you can continue to get this dope content and be a part of these conversations right here on my personal Facebook page. You know what to do. Press the heart button, share this video, man. Maybe you don't need the information, but I know a lot of folk that I'm about to personally share this to and send it right to their messenger in their inbox. I'm about to slide in their DM with the shared video from the Working People's Podcast about home ownership, because I know a lot of people right now need this conversation. Also, if you're looking on the Working People's Podcast Facebook page, do the same. Press the thumbs up like button, drop some comments below, share this video, and once again, shout out to Rodney Williams and Second Friendship Missionary Baptist Church, who is allowing us to stream live to their Facebook page. Shout out to the ship. Appreciate y'all very much. Now, I'm going to ask my brother to do me a favor. He didn't know this was coming. But I remember when I first saw him doing his thing on YouTube. So I want you, if you don't mind, do this for me, man. I know it's last minute, it's impromptu. Can you sign us out, Don Ed Lifestyle? You know how you do your little sign out. It's your boy. Just sign us out. I'm going to let you sign us out today. Can you do that for me?
I got you, man. I would say it's been a while. But I just want to let you know that it's been a blessing, and I appreciate you for having me on the Working People's Podcast. It was a pleasure, and I love talking to you guys about home ownership. As you know, I am your realtor landlord, but but until the next one, it's your boy Don Ed Life.
Peace. We out.